speaker. We heard a lot this morning about remittances, for instance, and what do people do with their money. They buy real estate, they buy equities, and things like that. But another area is the mutual fund business. So we're going to hear about this, because this will be a very important side, because it is a way for average people to invest their money and so forth. The company will speak to Sun Life. I didn't know, but they have a 100-year, 120, 30-year history in the Philippines. And I'm told, I didn't know this, but they're the largest life insurance company in Philippines. And quite a bit larger, almost twice the size of their next competitors, which I never realized before they had made that much progress. Our next speaker, Riena Pama, she manages the asset management, or what I call the mutual fund side of the business. This is the largest non-bank I'll call it mutual fund business in the Philippines, and the second largest in the overall industry. So let's hear about this sector from Riena Pama, the president of Sun Life Asset Management. She's also the wife of Judy Pama, who we know is a really good guy in the BPO sector, and has run a couple of operations here very successfully. So please come on up.
So good afternoon, everyone. So, well, my topic is, well, it's not an investment outlook, but maybe something that's closer to my heart, which is the role of financial inclusion and literacy in nation building. Okay. I think it's been talked about earlier, and you've heard all about it. A lot of the other countries have been pretty amazed with the Philippine growth story. Our GDP grew at an outstanding pace of 6.1% in 2014, and is seen to grow even faster this year. We're the fastest growing country in Southeast Asia, and we're only second to China in the Asian continent. And why is this so? It's because of the strong remittances and flourishing services sector. And aside from that, as also Mr. Orr has also talked about, the property sector has also blossomed, backed by strong demand and low interest rates. Stable inflation and low oil prices are seen to boost the consumption, domestic consumption, which is driving our economy. And as you've seen, the local equities market, has registered a new high again this year. And people are, there's been some correction. A lot of people are waiting for correction so that they can invest and get into the market. But we're still looking at around 8,500 probably by the end of the year. But how does this, translate into benefits for the average Filipino? Even the average Filipino has benefited. Unemployment is down to 6% in 2015. Participation rate for grade school is now at 95% for elementary, and for high school, it's at 65% already. Wages have grown, with average household income growing to 380,000 pesos per annum. So it's around 30,000 pesos a month. And they say when the per capita reaches almost $3,000, there's enough money now for an average person to be able to invest, in financials, going to investment outlets already, and not just, for basic food and shelter. Access to utilities have also improved. There's more power and water also for the average Filipino. Basic needs have been better addressed. And I think you've seen also in terms of residential properties, property companies and I think banks have found a sweet spot where a house is, there's better affordability and easier access to credit. And that's why you see more and more people, more and more average Filipinos having at least a place to live of their own. Also, in terms of information technology or IT, is also beneficial to the Filipinos. The internet is a vital tool for social and economic development, and access to the internet has been extended to over 38 million Filipinos. With the internet, it enables us to bridge development gaps in areas such as education at very low costs. And 87% of the population has cell phones. Although small at 15%, the smartphone penetration is expected to reach 50% by 2016. And as you know, with a smartphone, you can do practically everything already. However, there's still many things to do. Though Filipinos have experienced a substantial improvement in well-being, there are many more aspects that are lagging behind, two of which are financial inclusion and financial literacy. So looking at this example, an average annual household savings is 50,000. So this is annual. So that's 50,000 over the 380,000 average income I mentioned earlier. But only 25% of households had actual savings. And of those who had savings, 40% just kept their money at home. And for every 10 households, only 2 had a bank account. So you see, almost everyone has a mobile phone, but a large portion of our population still do not have access to formal financial services and education. If the Philippines continues to lack financial inclusion and literacy, we run the risk of Filipinos choosing alternatives that may be detrimental for their financial welfare. Examples of which are, the pyramiding schemes or Ponzi schemes. For those who are able to build savings without financial literacy, they may fall prey to fraudulent, as I said, pyramiding and Ponzi. You've seen it all over the news lately. How billions were lost, and these are lifetime savings of the people. And for those who need to borrow, they may settle for lenders who charge them exorbitant interest rates that make their financial position deteriorate even more. So we go to the importance of financial inclusion and literacy. They go hand in hand and are the pillars of financial success. Financial inclusion gives Filipinos access to a wide range of financial services. It's a social responsibility of the public and private sectors to extend these basic services to the Filipino people, to the average Filipino. Broader financial inclusion coincides with greater local economic activity and decreased economic inequality. Financial literacy enables Filipinos to make well-informed decisions about their finances. And a higher level of financial literacy leads to Filipinos to understand their spending habits, consider the financial products available to them, and better plan for their future. With proper education and sufficient access to financial institutions, Filipinos get a helping hand in achieving their financial objectives. So based on our studies, primary goal of most Filipinos is to own their own home. It's one of their major life goals. And now it's even made possible for even more people with the home loans granted by banks and easier access to credit. Aside from that, education is also another primary goal. However, as tuition fees have been increasing by almost 10% annually, it has been more and more difficult for parents to pay for their child's education. By planning early, the financial impact of increasing tuition fees can be minimized. Educational plans and long-term investments such as Ripple funds help achieve this goal. Retirement is well-deserved after a long career, but to be financially independent after retirement is another story. Consistent investing in mutual funds throughout one's career can bridge the gaps. You have your SSS or your GSIS, but this is not enough anymore, for your retirement. There are other alternatives like, bonds and other fixed income securities, but, mutual funds could give you, better returns for your retirement. Aside from retirement, maintaining one's health is a priority, but it can be expensive. Unforeseen health risks may take a toll on a person's savings, and insurance companies can provide coverage for major illnesses. So what do we do, the investment companies or the asset management companies? Of course, investment companies are normal companies whose objective is still to make profits. But why should we participate in improving financial inclusion and literacy? Because it makes sense from both a social and business perspective. Most of the investment companies or asset management companies derive a substantial portion of our investments from corporations and high net worth individuals instead of the average person. As for those who focus on the retail customers, there's still a very low penetration, with around $300 billion in GDP and only around 600 billion pesos, in mutual funds or UITFs. Penetration is still very low at 6%. And the challenge is more of having a wider distribution network that is both easy, convenient, and cost-effective. And pursuing this advocacy will lead to a bigger pie for everyone. Customer base will expand as more individuals are exposed to financial services. And fees for asset management companies increase together with the increasing AUM or increasing investment value of the clients. So it's a win-win solution, and we are not on opposing sides. Well, there's still some structural challenges. Reaching out to Filipinos and educating them about finances is not a simple task. Challenges, as we mentioned, are substantial costs to expand, limited expertise, profitability that may be uncertain because of all the investments it takes for distribution. And at the same time, culturally, Filipinos are not as open discussing financial matters. Hence the paradox. The latest Financial Literacy Index of MasterCard ranks the Philippines 8th out of 16 Asia-Pacific countries surveyed. The Philippines had an overall score of 66. We were tied with Myanmar. The results of our own solar flare from sunlight, which is the Financial Literacy Advocacy Report, shows that over 65% of our respondents claim to be at least a novice or an expert in their finances, but only 8% had gotten above 80% in the financial literacy quiz. The OECD as well backs this up in their report, saying that not only do individuals lack an adequate financial background or understanding to navigate today's complex market, but unfortunately, they also generally believe that they're far more financially literate than they actually are. So, with that, it inhibits learning, and we have to change that. So where does financial literacy begin? So you see there's the family, the school, and the community. For us, family is the heart of everything, and this is where any type of education starts. Like for me, myself, the first thing I learned about my own finances was maybe from my grandmother, who would talk about, always saving something for myself before spending, and ideally it would be the same for the others. So the idea would be for financial literacy to start within the family. Then when they go to school, when the kids go to school, hopefully it could be strengthened with the foundation that was established at home. And it could be further improved in the context of, with the financial institutions and in the community or the government as well. Unfortunately, there's still much improvement that has to be done at the root of financial literacy, which is just even the basic Filipino family. The private and public sectors can focus their advocacies through school and community first. We could have lessons on personal finance incorporated in their curriculum. There could be more engagement with students through seminars and programs. We can tap employers to raise financial literacy just with their employees. And we've been using also social groups and media outlets. This improvement in financial literacy will then trickle back to the family setting, resulting to Filipino households that are more open to discussing money matters and will act as the anchor for financial literacy for future generations. So we go from sustenance to financial freedom. So at Sun Life, we advocate a shift in culture, one from spending to saving. In fact, I was just telling Kim like a week ago, our culture is really more of spending rather than saving. I think everybody you talk to knows more about the latest deal in terms of discounts in restaurants or the latest deal in terms of traveling, airfare, but nobody seems to remember maybe the magic of compounding. Maybe you've seen studies where if you start saving or investing early, for example, 20 or 30-year-old, saves maybe 30,000 pesos a year for 10 years, 300,000, 300 for 20 to 30, 330,000. And by the time this person is 60 years old, they have 4 million pesos. Whereas if you start at 40 years old or 40 to 45 and save again for even a higher amount, 50,000, also for 10 years, by the time you're 60, you only end up, there's a difference of 1 million pesos. You only end up with 3 million pesos and around 8%. So, is it starting earlier, saving earlier, a better deal than starting later? And these are ideas that we'd like to to spread to everyone. Even at home, if your own children, your house help. So we also need to break down the apprehensions with regards to investing. People think that investing is only for the rich. People should not be afraid to manage their finances. Currently, less than 250,000 people have invested in mutual funds, and that's just 0.25% of our population. We have initiatives like a website dedicated to personal finance, conducting information sessions with universities and social groups, and extending basic financial literacy to marginalized sectors. So that's through Sun Life. So people should not be afraid of talking about how they could save for the future. Investment companies should also focus on the customer's well-being and provide financial solutions for everyone. We've lowered barrier to entry with our mutual funds. Our minimum investment amount is only 5,000 pesos. And there's been a transition to lower fees and long-term investing. We incentivize long-term investing with our sales structures, and we have, our promos are really designed to encourage the clients to save more, to stay longer with the funds, because that's where you will see the benefit and see how your money will work for you. Apart from that, more products are being developed to address various financial needs. Being an archipelago, it may be difficult for a financial institution to expand across the Philippines. At Sun Life, we have 145 branches across the country and customer centers. They are located in over 50 cities across Luzon, Visayas, and Mindanao. Our mutual fund advisor base is now 2,500 strong and still growing, and it is out of the 6,000 advisors of Sun Life. And as a result of that, we now have 70,000 lives made brighter by Sun Life. Also, as I mentioned, we have to leverage on technology. As I said, the challenge for maybe an average Filipinos being able to reach that, and we think through better IT, we would be able to reach a wider base. Technology will be a powerful tool in reaching out to more Filipinos. Dissemination of information is swift and far-reaching and also cost-efficient. And I guess we will be connecting directly to the bigger demographic, which is the millennials, who, as I said, have to start early already. PIFA is the Industry Association for Mutual Funds. And there are 9 companies right now with PIFA, and we're working with our regulator, which is the SEC, and also Congress as well. In fact, we're discussing the collective investment schemes law to further develop, the industry. We need to expose probably our regulators to, the products, better products, innovative products, and even products which can reach a wider base, and also maybe expose them to, the developed markets in terms of being able to be more open and allowing us to reach a wider base. And I guess also maybe just simply approving products faster would be a big step forward already. So with that, I hope I'll enlighten you as well about the industry and help us also in driving this to the average Filipinos, and we could, as we said, we're working for the financial freedom of everyone. Thank you.